Investors have gone from pure greed to absolute panic in less than a year. And with the Nasdaq down more than 25% and some market pundits referring this market to the dot-com bubble, expectations have dropped considerably. One sector that has outperformed the overall market has been aerospace and defense. Interest in the sector grew after Russia invaded Ukraine in February. Searches for defense stocks by financial pros and retail skyrocketed, nearly doubling in the first week. While some of that initial mania has died down, we've seen consistent interest in defense ETFs. In fact, the iShares US Aerospace and Defense ETF garners nearly double the volume of popular Industrial Select Sector ETF. And it's not hard to understand why many advisors prefer the ITA ETF to individual equities. There are over 60 stocks in the sector, which some investors find overwhelming to research. And if you're bullish on the sector, why just pick one or two stocks when you can buy an entire basket? ITA seeks to track the investment results of an index made up of U.S. equities in the aerospace and defense sector. 97.59% of the fund consists of aerospace and defense stock, with 1.58% of the stocks in the fund geared towards industrial machinery and 0.61% towards leisure products. The rest is cash and derivatives. And since its inception 16 years ago, ITA has delivered cumulative returns north of 400%. While the ETF is diversified, it is heavily weighted. For example, Raytheon Technologies consists of 22% of the portfolio, and Lockheed Martin makes up 17% of the portfolio. Currently, ITA pays a 68-cent annual dividend to its investors on a quarterly basis, giving it a 0.7% yield. We rank this as an 8 out of 10 ETF. Several of the largest corporations in the world are revising their numbers lower in anticipation of the economy slowing down. But even if we do sink into a recession, ITA should outperform the overall market as it has been. We are constantly reminded of the threat of war, and given the recent invasion of Ukraine from Russia, we believe that the U.S. government will continue to take steps to strengthen its military. And because many of the companies in this ETF derive their revenue from government contracts, we believe they'll be just fine.